Live from the New York Stock Exchange, now on BBC News Business Today. Opening bell.
You want to talk business? Meet me in the On-Board Lounge.
For US shares, Disney's stock sinks after the entertainment giant reports a loss for the first quarter. Nevertheless, Disney boss Bob Iger tells investors we've turned the corner as the firm's streaming division finally turns a profit, 6 months earlier than it promised Wall Street. Also coming up, pressure in the pipeline. BP profits slump. The results are worse than expected, raising further questions about the oil giant's business plan. Plus, back on the radar for US regulators, Boeing faces a new safety investigation, this time over the 787 Dreamliner. Hello, welcome to Business Today. I'm Michelle Fleury. US markets have made a muted start here in New York, shares of Disney sinking after the entertainment giant reported a loss for the first 3 months of the year. Now, that's despite the bombshell that its streaming business has made a profit for the first time after years in the red. We'll get more detail on that a bit later. But first, Wall Street, its leading shares closed at a 3-week high on Monday on hopes that interest rates may be coming down in the coming months. So will that optimism last? Let's speak to Sam Stovall, Chief Investment Strategist at CFRA here in New York. Sam, great to have you here on the programme. We've seen the Dow basically trying to sort of push forward on hopes that perhaps the US economy isn't overheating. Do you think it can sustain that?
Yes, Michelle, I think it will. Right now, the market is focused on recapturing what it lost in the 5.5% pullback that we experienced since reaching the 22nd all-time high on March 28th. And our expectation is that we could continue to see U.S. GDP growth in the 2% area, but then also see inflation continue to come back down, allowing the Fed to cut interest rates at least twice by year end.
I mean, is there a risk that it overshoots? And the reason I say that is Americans saved up a lot during the pandemic, but now they seem to have exhausted that. So where does that leave us now in terms of how the economy is doing?
Well, our expectation is that retail sales, while they will be softening a bit, are still going to remain fairly positive, averaging around the 2+% area. And so what we are seeing, however, is the debt level starting to creep slowly higher, which is something that longer term could be a bit of a concern.
And I mean, we just heard Disney's results. The parks business did well. What do you think that tells us about how Americans are coping right now with high prices and inflation still sort of where they're not comfortable?
Well, with the parks doing well, it's still an indication that consumers are more interested in experiences than they are in buying specific products. So our expectation is that tourism will continue to do very well, especially in Europe and in Asia, that will likely see more experiences here in the U.S., whether it comes from live entertainment, et cetera. So the consumers want to satisfy their desires, which is to get out and do something.
Experiences are king. Sam Stovall, great to have you on the programme.
Thank you.
We have turned the corner. That is the message to investors from Disney boss Bob Iger as it raised its profit forecast for the year and revealed that its entertainment streaming business has turned a profit for the first time. Disney launched its Disney Plus service back in 2019 to compete with Netflix and adapt to the changing way we get our entertainment. It has been losing money since then. Disney promised Wall Street those losses would turn to profits by September. But take a look at this. Disney's entertainment streaming division made a profit of $47 million between January and March. Now, that's compared to a huge loss of $587 million this time last year. So, out of the red, 6 months ahead of schedule. Let's talk to Hannah Walsh from Ampere Analysis in London. Hannah, a huge surprise to the upside. I mean, are we going to look back at this and say this was the moment its streaming business really took off?
I think it's a great news for Disney. It's something they've been looking to achieve for quite some time now. And yeah, I think it does really show a great sign for Disney's entertainment streaming platform. It is worth noting, though, that when you combine the entertainment streaming services with its sports streaming services, the streaming business of Disney did still see a loss in this quarter. So that's one that's quite an interesting headline, and that we'll keep an eye on going forward.
And we just heard there from our last guest talking about Americans still seeking out experiences. That seems to be borne out in the parks results. But the company executives did warn that they could see a moderation in demand going forward. I mean, is that what is driving down the share price down sharply this morning after what on the surface is positive results?
So that definitely be one consideration. You know, the parks business has seen a great growth domestically, but also internationally with the Hong Kong park as well. They did indicate that there's going to be some slowdown, but also they said there was going to be some slowdown in terms of subscriber growth for Disney Plus in the Disney's third quarter of the year, as that growth starts to slow. That's really the side of the business that investors are keeping an eye on at the moment. And that's probably largely the reason why we saw that kind of more declining rate.
I mean, Hannah, you know, it's striking. Bob Iger, the CEO of Disney, has just come across a really bitter proxy battle with investors over leadership of the company. Is that behind it now?
I think so. I think even though the results, you know, there's some downsides to the results, I think it's still very good news that the streaming business has done so well on the entertainment front. I think it's clear they're investing a lot more thought into the future of ESPN. So although it didn't do as well this quarter, there's definitely significant advancements they're looking to make to ESPN to really boost revenue in the sports segment. And I think they're also looking at the theatrical sector in a very good way, really trying to figure out what the best way to make the theatrical sector more profitable as well. So I do think there's good signs for Disney and Bob Iger in that respect.
Yeah, as you say, so many streamers getting into the sports business right now. Hannah, thank you very much for joining us on the show today.
No worries.
Well, let's move to the UK now, where oil giant BP has reported a slump in profits for the first 3 months of the year. It made $2.7 billion between January and March. That was down 40% on the same period last year. The results will put more pressure on BP's new CEO, who took over in January. Part of the slump can be put down to lower oil prices, but as our business editor Simon Jack explains, arch UK rival Shell is doing much better than BP, raising questions for some shareholders about the company's strategy.
We are coming out of the back end of the energy crisis that was sparked by Russia's invasion of Ukraine, which saw Russian oil and gas supplies either shut off or shunned by many markets, which sent prices rocketing. So we're coming down from there. So I think it's very unlikely that the likes of BP will ever make as much money as they did during that 2022-2023 period. But what is interesting about the BP numbers, down 45% on lower oil and gas profits, they slightly missed the estimates that people said of what they were expecting them to make in profits, whereas Shell, similar company profile, actually exceeded their estimates. And this is down to the fact that Shell has been unapologetically going hell for leather for more oil and gas production. And BP has been less aggressive in that way, saying it's trying to stick to its transition plans. Both have weakened them a little bit, but there is some tension between BP and Shell shareholders, saying some of them would like the BP strategy to be a bit more like Shell. So we'll see where that goes.
Saudi Aramco, the world's biggest oil company, says profits were down 14% in the first 3 months of the year. That's down to lower oil prices as well as cuts in production agreed by the OPEC group of oil-producing nations. Now, this was all done to try and support the price of crude. Here's a figure to get your head round, though. Aramco says it expects to pay more than $124 billion in dividends to shareholders this year. That largely means the Saudi government, which still owns more than 80% of the company, well, it relies heavily on Aramco to finance its spending. Our business correspondent in the Gulf, Samir Hashmi, explains.
Saudi Arabia has put in place production cuts, which have been there since July 2022. And since then, their profitability has taken a hit because not only has their production gone down, but even oil prices have fluctuated during this period. Now, in the last 3 months, if you look, prices did go up briefly, but that was only for a few weeks, and after that prices were back to where they were, the average price in the last 6 months. So that is why the profitability may not go up as much as we have seen, let's say, in the previous years when oil prices were over $100 a barrel. But the thing to keep a watch on is going to be the dividend, because that's the main thing for the Saudi government. It's a state-owned company, and the Saudi government benefits the most with a high dividend income. So despite their profitability coming down in the last year or so, Aramco has not cut the dividend they pay out. Aramco has been trying to expand their production capacity, not only when it comes to crude, but other segments of the businesses as well, spending in a big way on renewables. I think that's one of the core areas for Aramco, because they realize due to climate change, demand for oil could take a hit, or demand for oil could go down in the next 2 decades, and it is important for them to diversify the business. So they are investing in renewable businesses. They're also investing big time in hydrogen, which is one of the big bets for many oil companies in the world, including Aramco.
Now to new safety questions facing aircraft giant Boeing. Regulators here in America have opened another investigation after the firm acknowledged that it might not have carried out proper quality inspections on its 787 Dreamliner aircraft. It comes on top of a probe launched earlier this year into the safety of its 737 MAX planes after a door panel blew out on one of the jets shortly after takeoff. Leadership expert Chris Roebuck told us it's another example of Boeing's problematic corporate culture.
This has been going on for 6 years now. You just think it can't get any worse, but they've managed to come up with something that is worse. The fact that records might have been altered on the process recording of quality for aeroplanes, the 787, is mind-blowingly worrying. Now, Boeing say, OK, we've checked all the ones on the production line. Yeah, but what about the ones that have left the production line and are out there? It's just so many leadership and culture failures over the last 6 years.
In other news, the Swiss banking giant UBS has reported a better than expected jump in earnings for the first 3 months of the year, delivering their first quarterly profits since the takeover of Credit Suisse. UBS clocked in a net profit of $1.8 billion, up from a $279 million loss in the previous quarter. Nintendo has posted record profits thanks to the weak yen, but warned earnings will slump nearly 40% this year. The video games giant says it will reveal a successor to the hit Nintendo Switch console later this year. Before we go, let's take a look at the markets in the rest of the world. We've seen a mixed picture in Europe. Actually, no, I should say all in the green right now. In the US, Peloton is one of the big movers today on reports of private equity interest. That is all we have time for. Stay with us here on BBC.
1,500 movies? I don't want this flight to end.
Thank you for watching. Want more videos? Subscribe today.